But let's welcome on board Amnish Agarwal as well as Rajesh Palvia as well to talk about how the fundamentals and the technicals are shaping up. Amnish, hi, morning. Let me start off with you and firstly wish you and your entire team at PL a very happy new year from all of us at ET Now.
Yeah, Happy New Year, Aisha, to you and your team also.
Thank you so much. Amnish, how do you think the year ahead is going to pan out? Is it going to be as happy perhaps as the first half of 2024 or not quite?
I think in the next couple of months, I expect the markets to remain slightly volatile because I think the first, you can say, the factor to watch out for that the actual government swears in US, Mr. Trump becomes, you can say, the president. The second key factor to watch out for will be the budget, which will be on 1st of February. And then obviously the earnings season, which is ahead of us. So I think you can say next couple of months could be volatile, but I think as we progress through the year, I expect the markets to not only stabilize, but give double-digit returns in the coming year.
So have you coming in. Rajesh, hi, good morning, and wishing you and your team a very happy new year as well. Now, when I remember our past interactions, you have been quite bullish on names like Loris Labs, you have a Bata on your list, along with GNFC. Tell us, do you believe that these stocks could continue to do well in 2025 as well? And do you still continue to maintain your bullish stance on a couple of these names?
Good morning, Sneh. Good morning, everyone, and wishing you a very happy new year to ET Now family as well as the viewers. I wish this 2025 is going to be a healthy and wealthy for all the viewers of ET Now. Looking at the market scenario, I think pharma is one space where still continuity of uptrend is there, and most of the stocks are showing good traction in terms of buying. As you mentioned about the stock like Lotus Lab, Bata India, all these stocks have shown some bit of buying action in the last couple of days. Lotus Lab is looking quite bullish, and stock now managed to give breakout of its previous swing high. The way stock has holding above 590 level, I think if it continues to remain above 590, there is a possibility of continuation of uptrend, and really can extend to 630 to 640 kind of level. So I think one can hold the position in Lotus Lab with stop loss of 588. If we talk about GNFC, after a correction, there is stock is now trading near to its critical support area of 540, 545 kind of level. I think if its stocks manages to hold this 540 level, some pullback action we could witness in GNFC also in the near term perspective. And in the pullback, the immediate hurdle for the stock on the higher side is placed at around 575 to 580 zone. If at all stock crosses above 580, then continuation of uptrend would be there for GNFC. But at this juncture, those who have already bought or want to buy at this current level, 540 should be the stop loss to follow for GNFC.
Coming in on some of these fertilizer companies, etc. But Amnish, wanted your take regarding the IT pack. I mean, yesterday there was quite a bit of carnage with that index slipping almost 3% at 4-week lows. It recovered on an intraday basis, but there seems to be this niggling worry around the H-1B visa. Now, of course, Donald Trump was on board with what Elon Musk said, and the fact that they are looking at raising perhaps the minimum flat wage for the H-1B visa, but that shouldn't be a big headwind for India in any case, or the Indian IT companies. What do you make of that?
Anisha, the main thing is that if you look at H1B visa, and even during the earlier, you can say 4 years of Mr. Trump, for the first couple of years, there was a marked clampdown on the number of visas issued. But as I think the tenure progressed after 2020 in particular, during the fag end of that, you can say the number of H1B visas which were being issued by US, that actually normalized. Now, in the current context, I think it is much more to do with only H1B visas, because if you look at, say, past couple of years, there is no problem with visas in general, but the problem is with regards to the demand. And for that, first of all, there has to be some geopolitical stability, and the demand from Europe and US that has to revive. So we would be, I think, I would say that H1B visas, it is just a temporary kind of, you can say, rhetoric. But over the medium term, the demand for the IT services from US, impact of AI, and then the demand from Europe, these are the three factors which have to play out for. And these are something where there is a lot of uncertainty and volatility. which has been happening from quarter on quarter in terms of performance as well as in terms of guidance. So I would say no clear-cut path as of now, which gives you very strong visibility. But yes, these could remain, you can say, range bound with slightly positive bias in the near to medium term.
Right, okay, that's the take coming in on IT. Rajesh, on the charts, what are you reading? Do you think this pressure on Nifty IT is going to continue, and individual names and pretty much across the board, as was the case yesterday, do you think that's going to remain for some more time?
So after a decent rally, most of the IT stocks are now witnessing supply pressure at a higher level, be it large cap as well as the mid cap IT stocks. But some of the names like HCL Tech, Coforge, these all stocks are still holding the ground at a higher level and managed to hold their short-term breakout levels. So I think very few stocks are now looking bullish for near-term perspective, but long-term structure is still bullish for Nifty IT, as Nifty IT is now trading near to its 50-day, 100-day moving average support area. So if Nifty IT slips below to 42,800 zone, then we may see some significant unwinding action in the IT stocks. Till Nifty IT is holding above 42,800, I think some pullback action from those level we can expect in IT Nifty IT, as the long-term structure for Nifty IT is still on the bullish side. Stocks like Coforge, we are still holding our bullish view, as stock is continuously in an uptrend. Series of higher top, higher bottom formation is there. So in decline, Coforge, if you get opportunity to buy this stock around 9400, 9450 kind of level, it's again attractive level to buy Coforge in the decline. And again, once the stock crosses above 9850 kind of level, we may see a rally to continue towards 10,000 or 10,000, beyond 10,000 level also. So Coforge is looking bullish. HCL Tech is also holding the ground. It's managed to hold 50-day moving average. So here also, if it's able to hold above 1860, 1870 zone, I think here trend is likely to remain on the bullish side. And once HCL Tech manages to cross above 1950, there is a possibility of 2050 to 2100 kind of level going forward for HCL Tech also.
Of IT names across the mid-cap and large-cap space looking good to Rajesh. Amnish, want to get your view on ITC. It's, of course, in the news today on the back of the effective date of the ITC Limited and Hotels demerger. Give us a sense of what kind of price discovery are you seeing for ITC Hotels, which will be listing sometime soon. We're expecting this to be anywhere between 150 and 170. And after listing, what do you expect ITC Hotels is going to fare like? And also, how do you see the impact on ITC Limited's stock price once the hotels arm is separately listed?
You see, for ITC, if I go by what we have been estimating, for example, last year they had an EBITDA of more than say 1,000 crores. And if you look at say most of the names on a trailing basis, they are trading even up to say 40 times, 50 times EV to EBITDA. If I look at say for next say couple of years numbers going up to say 26, 27, which we are building in as of now, based on that, we have valued ITC hotels at say roughly around say 32,000 crores, which values it at 25 times EV to EBITDA, which seems quite reasonable in the current environment, given the fact that it's a zero debt company, 1,500 crores kind of a cash will be there in this company. Plus, you will have, you can say there is a strong momentum in the entire hotels or the tourism space with, you can say, double-digit increase in ARRs, occupancies being good. And it is a very steady company. It is always, you can say, adding assets and continues to increase the number of keys it is operating in. So to that extent, I think it looks quite interesting. Now, if you value it on say 25 times on an EV by EBITDA basis, I think it should be, I think, looking at say upwards of 200 rupees per share. But if you value at say 32,000 crores kind of a number, at least on 125, 126 crores shares, then the stock should be upwards of 200 rupees is what my feeling is. Now coming to ITC will continue to hold say 40% stake in this company. And based on that, I think there could be some reduction in the SOTP for ITC by say around 15, 17 rupees. And the balance 10, 12 rupees that should remain with. Now, from that angle, I think the listing of ITC hotels as such is positive for the shareholders. From ITC's current standpoint, there are two events which are going to be there. One is the demerger of ITC, the hotels. The second is the likelihood of interim dividend by the middle of February. And the third and most important thing would be the budget, if there is any change in the duty. So I think all the three are quite important. Now, if there is no tinkering with the excise duty, etc., in the budget in February, then I think the stock can give you double-digit returns from here, because I think at least one should factor in 20 rupees kind of you can say gain from the listing of ITC hotels per share of ITC.
That sounds good because the price levels are sounding healthy for both ITC hotels and also not much of an SOTP based hit on ITC Limited as well. But there has been chatter on the street about the 35% prospective GST that could be applied to a couple of these tobacco names, the likes of ITC and Godfrey. Are you seeing any impact of that if that does happen in the next GST meeting? It was not discussed in the one that just recently happened. If it does go ahead, go into motion, what kind of impact do you think that is going to have on ITC and the stock price?
Format it is being done. For example, if it is GST and then there's a cess over it, because they are you can say earmarked as sin goods. Now, the main thing is if you club together cess plus GST, and the cess was earlier, there was an understanding that it will be there for say first 5 years, but then the period was extended due to COVID. And I think that period is definitely over. Now, if you look at that they actually add this 28 plus 5 and then they make it 35, then the change will be only 2%, which I think is not going to be anything meaningful. If, however, that 5% is not subsumed into it, then the change could be bigger. But I think the possibility of 33 becoming 35, if at all your taxes have changed, that seems higher than 28 going to 35. So if 2% tinkering is there, so I don't think it is going to matter much to the entire scheme of things.
Okay, that's that on ITC. Still some time to buy ITC in case you want to avail the free shares of ITC hotels once the demerger kicks in. But
if you like this video, then like, share and subscribe to ET Now.